guys, what is going on? Welcome back to my Robinhood portfolio. This video will be part 2 of the two-part video series describing how to buy and sell stocks on Robinhood. The last video I just put out, the one right before this video, I went through all the buy orders, reasons to put out these videos, as well as a nice review of all 4 buy orders. If you haven't taken a look at that video, please look at that video first and then come back to this video where I will now be talking about how to sell a stock on Robinhood. As with the buy orders, there's 4 different buy orders that you can do on Robinhood. There's also 4 different sell orders you can do on Robinhood. Anywhere from the simple market and limit orders to the more complicated stop loss and stop limit orders, just as the buy orders were. So again, take a look at that prior video with the buy orders, and a lot of these videos a lot of these orders may make a little bit more sense with regards to selling off stock after taking a look at the buy orders. But I'll be using Ford again as an example here, as I did with the prior buy video. I'll be going through all 4 of the different ways to sell off a stock. So having said all that, let's kind of jump into the orders here. As with the prior video, there's 2 buttons here, one for buy, one for sell. We'll be taking a look at the sell button here. If we click on sell, you can now see up in the the right upper corner, limit orders here. If we click on that particular box, we see there are 4 different orders that we can do on Robinhood here. Market order and limit order, those are the 2 more basic orders, and then we have stop loss and stop limit. These are much more detailed, much more nuanced, a little bit more sophisticated ways of trading. And really, the first 2 would be good for buy and hold investors. The last 2 are a little bit more complicated and are really used for stocks that are moving quite rapidly, have a lot of momentum trading surrounding them, as well as penny stocks. And really, as I discussed in the last buy video, market orders, I would essentially consider that to be not an order on Robinhood. You should always be putting in limit orders at the very least, and then stocks that are moving quite rapidly, you want to put in stop loss and stop limit orders. And also for buy and hold stocks, you can also put in a stop loss just to protect yourself in the event the stock starts trending down quite rapidly. So having said all that, let's kind of jump into all of the orders. As with the buy orders, the market order is the default method of selling a stock in Robinhood. Essentially, you just select the number of shares you want to sell, and you are selling off at whatever price the stock is currently trading at. And that's not necessarily this price here. If the price of the stock is changing rapidly, you don't really have any guarantee of what price you'll sell off. It could be higher than that, it could be lower than that. It's just an estimated credit here based on the last price of the stock when we first opened up this particular portal here. So if a stock's trading quite rapidly, this could trend down to 165 and you could sell at 165. Likewise, it could be trending up to 170 and you may sell at 170. You have no control over the price of a stock. That's why essentially market sell, I'm basically saying don't do market sells. What you can do is a limit. I'm going to go back into the limit sell button here, and then back into the order types. So what you can do is what is called a limit order here, right in the middle. So basically, with this order, you can guarantee exactly what price you're going to sell the stock off for. You can see up top there, you're specifying the minimum amount you're willing to receive per share. So for example, if the stock is at $11.25 and you're happy with that price, you can essentially enter for the price $11.25. I can click, there we go, $11.25. If you click that, you can go next. Again, time and force here. I always have my orders cancel at 3 p.m. or at the end of trading. That way, if I have a lot of orders that are pending and they are not all executed, I know exactly in the morning which trades will be up on the app. If you put never expires, you can have a lot of pending trades. You may forget about those trades, and they will essentially sit there forever. And if you don't remember those trades or go back through your order history, you'll never know those trades are still pending. So I always put in 3 p.m. to cancel the order, and then essentially, like the market order, you simply enter the number of shares. But unlike the market order, estimated credit here, you'll never sell it less than $11.25. You may sell it for more than that, but you'll never sell it for less. That's why it's essentially an estimated credit here, but you'll always sell it for at least $11.25. So that's the power behind doing the limit orders. you can really protect yourself from a stock that may be trending down quite rapidly. If you put the limit sell in and try to execute that, you may sell at $11 or $10 for penny stocks. Going from 10 cents to 5 cents is a huge problem. So that's why I always advocate putting in a limit sell. You'll always be able to sell it for the price that you put in here. You might not always execute because if the price drops, the order won't go through, obviously, but you'll always protect yourself from a stock that's trending back quite rapidly. So if we go back in the orders, now there's 2 additional orders here, a stop loss and stop limit. And really this is to protect you from a stock that's trending back quite rapidly for buy and hold investors, but it can also be used in penny stock investing as well to maximize gains. So if we click on stop loss here, you see we are now specifying a price below the current price that converts your order to a market order. So I want to go back to the graph here because these orders are a little bit more nuanced, a little bit more sophisticated. So for example, let's take the stock here 1 week. Let's say that we open trading up here. That's right around $1.60 or so, $1.59. So $1.60, we'll just say $1.60. So we open trading at $1.60 here. You can see here the price is dropping rapidly. So you may want to try to protect yourself and put a limit sell off right here. So basically it's below the current trading price, but it's not quite at the end of the dip here. So you're really trying to protect yourself if you're away from your computer, if you're not actively following the stock, to protect yourself from having the stock trend all the way down here before you recognize it to sell off. So what you can do is put that order in here, and it won't sell because if the price is trending here, if you would normally put a limit order in and you put a price in below whatever the stock price is, it'll immediately execute. You don't want that to happen. You're basically trying to protect yourself. You really don't want to sell at this level here, but you don't want the stock to keep dropping below that price. If it does, you lose a lot of money. You basically lose from here to here. If you put that stop loss price in, you'll sell off here. So yes, you still do make a loss here from this interval here, but you're not going to lose the money in this interval here. So it's really a way of protecting yourself. You're not trying to make money with this particular order. You're trying to protect yourself. And since there's no short selling on Robinhood, I'm not going to go into all that talk about ways in which to maximize profit with short selling, because we can't do that in Robinhood. So that's another reason to use some stop loss orders. But for the purposes of this particular discussion, it's really to protect yourself from a stock that's dropping quite rapidly. So again, you're starting off at a price here. The stock all of a sudden starts trending down rapidly. So before it hits this price here, you can put an order in, a stop loss price here. You sell off here, and yes, you do lose from here to here. So whatever that interval is, you're going to lose, but you're protecting yourself from the stock dropping all the way down here, potentially losing a lot more money. That's the idea behind the stop loss order. So if we go back to the order types here, we go back to stop loss. Basically, you can put this order in, let's say $10 or whatnot. Again, time and force, and you're basically going to select the number of shares to sell off. So you don't need to sell off all your shares. You can only protect, maybe if you have 1,000 shares, maybe 500 of those you want to put the stop loss in. So if the stock starts trending down rapidly, you sell off. But there's always a risk that the stock will rebound immediately. So these aren't foolproof orders. This is a way to protect yourself. But again, if going back to this example here, if the price is here and you put your stop loss in here, if the stock trends down, you're going to sell off at this level here. But the stock could immediately come back up again, and you're essentially going to be losing from here to here because the stock now is higher than that price. But again, it's a way of protecting yourself from that stock going way down or trending on even lower than that. So it's not a foolproof order, but it's a way to protect some of your gains and protect you against big losses. The last order type here, much more sophisticated type of order, again going back into order types, is stop limit. So this is basically 2 orders in one. So you put your stop price and then you put your limit price. And again, this is a little bit different because there's not any short selling, but if you do a stop limit, you basically are putting in your stop price, let's just say $11, and then you're putting in your limit price, which can be maybe $11.20. And everything else is exactly the same. And going back to the chart, again, this is a little bit more difficult to understand, especially for new viewers. So you start off up here with regards to the stock price. The stock starts trending down, so you put your stop limit in or your stop loss order in here, and then you may want to put your limit price in up here. So the stock starts off, it trends down, Once it hits this price here, now your order is active. If it trends back up, you sell off at this point here. Again, trying to limit some loss. A lot of these orders aren't executed, or a lot of times the seller will simply cancel the order. It's a little bit unclear why you'd want to be using this order, to be quite honest. For buy and hold sellers, for penny stock investors, it's much more nuanced, much more complicated. So since essentially what you're trying to do, the stock starts here, you put your stop loss order here. So at this order here, the order executes. So if the stock is doing this, the order is not active. Once it drops below that, now the stock is active. If it trends back up to your limit order, it executes. In the same way, you could either do it this way as well. The stock starts here, you put your stop loss in here, maybe put your limit here. But again, if it's below, it's going to always execute once it gets past that. So it's essentially a market order at that point. So there's really no utility doing that. But there is some utility. It starts here, it starts dropping. Maybe you put your stop loss here. If it starts dropping back up, maybe for a dead cat bounce, basically a lot of times when stocks dip really dramatically, they kind of pop up before dropping down again. So maybe it's a way of maybe getting a little bit less of a drop. So if you were just to put a stop loss in, you'd simply sell off there. If you put a stop limit, you'd sell off here. So you're still losing money, but not quite as much as you would with just a stop loss alone. So hope that makes sense. Those are the 4 different order types. Again, buy and hold investors, I would always do a limit order. I would just kind of take market orders off. So I do a limit sell. And then for penny stock investors, or a stock that's moving quite rapidly here, we have stop loss and stop limit, with the stop limit simply being the stop loss order plus a limit order. So 2 orders in 1. So hope that makes sense. If you took a look at the other video, the buy video, these will definitely make a lot more sense. But essentially 4 orders here: market, limit, stop loss, stop limit. I would take off market. I would never do market order. I'd always do a limit order if you're a buy and hold investor or a stock's not moving that rapidly. And then for penny stock investors, or for stocks that are moving quite rapidly, you can do the stop loss. Also a way to protect longer term investors as well from a very dramatic downturn in the price of the stock. You can put it here and sell off. It keeps dropping, and then you can maybe buy back when it gets lower. And then the stop limit, as I discussed, is basically the stop loss order plus a limit order. A little bit more sophisticated way of trading. So just wanted to quickly go through all 4 of the different ways to sell a stock on Robinhood. As I mentioned, I put out a video prior to this one talking about the 4 ways in which to buy a stock. Really went through the stocks in a very detailed fashion. If you guys have any questions about this video or the last video, please let me know in the comment threads, and I'll do my best to try to describe it in text. If I can't do it in text, if it's just too complicated, if I'm not able to really describe that, I'll do another video addressing specific questions in the comment threads. That's really how I put out the buy video. A number of viewers were wondering about the different buy videos on Robinhood. I put some out in the past, a couple videos describing buy and sell orders in the past, but it's been quite some time. There's a lot of new viewers on the channel, so I just wanted to update you guys in a much more detailed fashion what all 4 of the buy orders are, and for this video in particular, what all 4 of the sell orders are. So again, if there's anything that does not make sense, please let me know in the comment threads down below, and if there's a common theme, I'll simply do another video updating you guys on exactly what is going on with all 4 of these orders. The market order, limit order are pretty easy to understand, but the stop loss and stop limit orders are much more nuanced, much more complicated, much more sophisticated types of trading orders. So if you have any questions about that, let me know. And again, not to make the video too long, I'll kind of end it here. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. And until next video, we'll see you then.